You're watching Business Incorporated live from Channels HQ. Coming up, South Africa's unemployment rate drops in the third quarter of 2022 to 32.9%. And China offers Rwanda a $7.1 million debt relief on a loan used to build the 6.36-kilometer Nasaka-Kabuga road. Plus, Ghanaian government set to raise 1.85 billion Ghana cedis in T-bills this week. Thank you for joining us on the program. I'm Ladi Williams. First off, let's kick off with sentiment in the market, starting with Africa. There we see in parts we track there, we see the NGX down marginally by 0.07% at the time we took this number. South Africa there, 73.439 thousand points there, up 0.10%. That's what's happening in South Africa. Other markets we track, North Africa there, we see the EGX up 1.28%. Big move there at intraday. Be watching out to see how that closes at the end of trade. While Kenya there, which sits down 0.13%, closed yesterday. All right, let's drill down now into the NGX. Let's see what's happening at intraday now. Join us is Abdurrashid Momo, equity trader, TRW Stockbrokers. Join us to give us a taste of what's happening right there. Great to have you on the program.
Thank you very much, Ladi.
So what's the sentiment in the market right now? Last time I checked, it was down about 0.07%.
The overall market still looks bearish. You know, keep in mind that we've had a bull trend since the beginning of November. Let's say the second week of November, we're having a bull rally, and for every bull rally, there will always be a sign of correction. So where we are now is stocks are actually correcting, whether they are taking a rest to move for the next bull trend, or this might just be the end of the bull trend. If you noticed last time I said there was going to be a flash bull trend. This is what we've seen. What just happened is that the month of this period just virtually recovered most of what it lost last month. But the way the market is now, the market is within a very strong resistance level, about 47,000 plus. So I think the market is going to dictate whether it's going to be another bull run from here or the beginning of a market moving sideways.
I know you know how to check all those resistance and support levels.
Yes.
Where are we now?
Yeah. We are within a resistance level, but the market is down by minus 113.26 now, 0.24%. And most of the indexes are actually in red, except the industry, insurance, and Lotus. Most of the indexes are down.
Looking at the market,
but the losses are actually marginal, not much.
Okay, looking at the market from your end, what stocks are moving the market down at this time?
Okay, the way I will look at the market, the truth is that the big players are actually not involved in the market now. What we're actually seeing, hold on, let's say the ones actually moving the market down is CNI Leasing, Cornerstone, Mayor, Transcorp Hotel, and John Holt. So you can see what I'm saying. They are not really the major ones actually affecting the market. If you look at the overall gainers and losers, that's the top five, and the top five gainers and top five losers. They are more of the, I'll use the word penny stocks. But what we are seeing in terms of the big players are actually more of consolidation, and they are volume driven. When it comes to volume, you look at Jitco, Zenith, Stanbic, FCMB, and Access Corp. Those are the ones in charge in the top five in terms of volume for now.
All right.
So the major ones are not actually. We are seeing more of correction. Okay, let me give you an example. Let's look at Zenith. Zenith is down by, I think it opened 22 naira. It's actually trading about 269 now, 2170. Sorry. So it's down by 30 kobo. You understand? So we just have to wait to see how everything works out. But the truth is that if I'm going to tell you how the market is playing, most of its levels are actually resistant levels. 22 naira for Zenith is a very strong level. GT is about 20 naira plus. It's now about 19 naira plus. It's trying to see how it settle at 20 naira at the end of the day. So what just happened is that the bulls have taken a bold step for the past 3 weeks. That within a very strong resistant levels now, and we need to know whether the market is going to break those levels now or in the future. But before December, I let's tell you that there's always a Santa Claus rally that comes on. And let's say this might just be the Santa Claus rally, but we don't know. But it is that if I'm supposed to tell you about the market is medium term bullish, but the long term is still we're still seeing the bears. The current bull trend has not made much impact in the overall market, which we had for the whole year.
All right, I guess we'll be looking out for that Santa rally. But looking at where we are right now, where do you see at the close of the market today? Where do you see the market?
You know how the market is. What I can say is, there are some major stocks in the market. When they sneeze, anything happens. Despite the fact that the market is down now, it reversed out from any of the big names like Dangstem, Airtel, MTN, BOA. They actually dictate the market. But for now, I feel, for me, if you're looking at the chart, I think the market needs to rest. If you look at it, upon all the scenario that's been on ground, the market has been down. How many people make like 20% in 2 days, like MBL? So that bull strike was actually a very strong one. So I think for me, I'll suggest the market actually takes a breather for now.
Yeah, quite a quick breather, if I might add. But
yes.
Looking at what stocks, are you looking at, to give some good gains this week?
We've actually seen those gains. The one thing that even when the market was down, there was actually one particular stock I was looking at then, which was that Fidelity actually came to my radar chart. Despite the fact that the market, even when the banking sector was down, Fidelity was actually one stock I was looking at then. And I think for now, what it's doing is it too is taking a breather for now. This is a stock that I feel in the long term, with all what's happening, if it breaks resistance, we're looking about the 5 naira range at the end of the day.
All right.
For now, every other stock, let's wait and see. Because what I'll say is that we know how much these companies are going to pay at the end of the year for their year end. And the rallies we've seen so far have actually surpassed what they're going to pay. And I'll just tell you one thing. There are always two players in the market at any point in time, the investors and the traders. So for the investors, even with the current price, they are still good entry points. The market is virtually in quote on sales. So it's still a win-win situation in the long term.
I guess Black Friday sales continue in this market. Thank you so much.
Yeah, I think that actually happened last week. It was Black Friday sales. Because, you see, Ladi, there's one thing you need to know. No matter how bad the stock market is, right, no matter how bad anything does, it gets to a point where even when prices get, some share price, when they get to a particular price, there's bound to be a rebound. And that's what we saw throughout last week. It was not based on, even when we talked about the financials, I said it will take market time to actually assimilate all these things. And at the end of the day, the market just decided to, and when those rebounds actually started, we saw them. I can give you an example. Normally, when I analyze the market, I always analyze based on their various indexes. And there was one actually gave us NGX banking. I said NGX banking was going to hit between 395 to 400 points. And that is where it is now. So the next thing going to happen is going to actually fight that level to see whether there's going to be a rebound. You know what we normally do is that we always wait for confirmation. If the market breaks that resistance, then a new bull rally starts. If not, then we are actually going to market might just take back, the bears might actually take back about 50% of what they've done for the past 2 weeks. It's more of correction stroke retracement. So I need to watch those lines. Those lines are actually, those figures, those are the things actually that guides us to know if we are going to be in a new bull rally,
right,
or consolidation.
Okay. Well, I know you watch your lines like a hawk. Thank you so much. Thank you so much, Mr. Abdul Rashid Momo, equity trader, TRW stockbroker, has given us an elaborate analysis of an intraday movement. Thank you so much.
Thank you very much. Cheers. Yep.
All right, now let's flip over to the Middle East. Let's see now. Sentiment in the Middle East is quite mixed at intraday. Right as you see behind me there, Abu Dhabi down 0.27%. So it's a bearish trend we're getting in the UAE. Flip over to other markets we track. There we see Qatar, Saudi on the other side in the green with Qatari index, they're the biggest mover, up 1.46%. All right, let's move on now. Let's see if we have what's happening in Europe. See, all eyes in Germany are still on the unfolding situation in China as Chinese security forces crack down versus protesters demonstrating against the country's zero-COVID strategy. Well, joining us now is Janelle Dumoulin from Berlin to tell us what's happening. So, Janelle, what has Germany's response been to the unrest in China?
Well, on this occasion, we can quote from an interview between DW and German President Frank-Walter Steinmeier. He stressed the importance of free expression and called on China to respect the right to freedom of demonstration. He said that he understood the protesters and why they wanted to voice their impatience and their grievance on the streets. Now, while Steinmeier's comments mostly focused on citizens' rights from the perspective of a Democrat, of a politician who believes in democracy, the acknowledgement of the unrest at the zero-COVID strategy is also coming up against wider German worries about the Chinese economy, Germany's biggest markets for its exports, of course. Now, the disruptions caused by COVID, the idea that the unrest fuels further unpredictability for German business and for global markets and for supply chains, as we saw yesterday. Even ahead of the protests, Germany's foreign ministry has been pushing to reduce corporate Germany's dependence on China, and that's after years of a softly approach meant to protect German investment there, in a way that arguably did not put human rights on the forefront. The interesting thing now to see would be how the foreign ministry proposal would be impacted by these demonstrations in China, given that there's always the potential for escalation in violence. But that is not a particularly easy question to answer at the moment.
I know the Germany, they had some key advice for the Chinese government. What were they?
Well, it was actually quite pragmatic advice. Germany's advice to the Chinese government, seeing as the key sticking point in all of this is the zero-COVID strategy, is to allow Western vaccines produced by Western pharma companies, BioNTech, Pfizer, and Moderna. These vaccines, of course, while still not allowed in China, underpinned the reopening strategies of Western economies and enabled them to lift most restrictions. Now, I'd like to quote from Stefan Hebestreit, that's the chief spokesperson for the government. He said the German government was taking note of the protests, but also that Chancellor Scholz brought up the use of Western vaccines in China in a recent visit to the country to meet President Xi Jinping in Premier Li Keqiang. Now, it's not clear whether this is something China will do, whether this is the kind of advice that China will take to help it out of its zero COVID strategy at a time where it clearly needs to at least consider doing so. But that is something that we will have to watch later on to see if that advice has had any kind of impact at all.
Wait and see a moment there. All eyes on China right now. Thank you so much. That was Janelle Dumoulin there giving us the details from Berlin. Let's move on to our next conversation. Now, we see the World Bank has indicated that financial flows to Nigeria and other sub-Saharan African countries is slowing down, though it will reach $53 billion in 2022, up from $50 billion in 2021. The bank disclosed this in its Migration Development Brief 37, noting that the growth rate in sub-Saharan African remittances slowed to 5.2% when compared to 16.4% growth recorded in 2021. Well, join us now is Matt Kindiga there, practice leader, Sub-Saharan Africa at Fronterview. Join us via Zoom. Great to have you on the program.
Hi, thanks for having me on the program today.
Yeah, so what is the outlook for remittances for Africa as the global economy slows at this point? We're getting that report there from the World Bank.
Yeah, certainly. So we are expecting to see remittances continue to slow, or I should clarify, the rate of growth of remittances will continue to slow, in our view, for at least the next 6 months towards Africa and other emerging markets. And this is because we are expecting the global economy to slow over the next year or so. But I would emphasize that there's going to be a very significant variation in performance between regions of the global economy. So, for example, China will slow, but it will continue to grow. We are going to see a recession in the US, but it's probably going to be a very mild one. But in contrast, Europe is probably going to see the steepest contraction in economic growth over the next 6 and maybe 12 months. And this means that remittances from Europe to the rest of the world, especially Africa, will likely be much more vulnerable to the slowdown in economic growth over the next 6 to 12 months. So not all regions will be equally affected, but what we are going to see is generally a slowdown in the rate of growth of remittances for sure to Africa.
And obviously we see countries, like back here in Nigeria, not getting the revenue from oil receipts this time, and we definitely rely also on foreign remittances. So what happens to economies like Nigeria?
Yeah, so in an economy like Nigeria, as you said, Nigeria is very reliant on oil for its forex revenues, its exports. What it will be doing will be compounding the problem of foreign currency shortages in Nigeria. So we all know that access to dollars, access to foreign currency in Nigeria is challenging at the moment. And this is mainly because of difficulties capitalizing on high oil prices as oil production is relatively stagnant in the country. This will compound the problem because remittance inflows into Nigeria are a vital source of foreign currency, and they're also a vital source of purchasing power for consumers and investment for businesses as well. So we would expect to see, although it won't have a sharply negative effect on economic growth, it's likely to compound the problems of forex access challenges in markets like Nigeria.
So how will consumers in Africa be affected by a slower remittance growth?
So in short, it will be mildly negative, but I would emphasize that there will be differences over the course of 2023. So as the year progresses, we'll see different effects of remittances slowing down. So roughly we can divide the year 2023 into 2 parts. During the first half of the year, consumers in Africa will face a double whammy of slowing remittances growth, especially if they're relying on remittances from Europe. And this will coincide with a peak in inflation. So pretty much every African economy is expected to see inflation rates peak over the next 3 to 6 months. In some countries, they will remain in double digits for the first half of 2023. So this will severely curtail purchasing power amongst many consumers. But things will actually change quite markedly, in our view, in the second half of the year. And this is because we'll see a slowing of inflation pretty much across the board in almost every market. So this will support consumer purchasing power, and this will coincide with a gradual acceleration of the global economy. And this will, again, generate stronger remittances flows into Africa. So really, we would say the first half of the year will be a bit more difficult for consumers, and the second half of the year will be beginning to look a lot better.
All right, so what will be the broader economic effect, with weaker remittances to Africa?
Yeah, so, we touched on the issue of, an economy like Nigeria being affected by weaker remittances. So currencies will certainly be affected across Africa. In many countries, remittances are a very big source of foreign currency. Zimbabwe is another good example. Countries with very severe foreign currency shortages as well, like Ethiopia, will see a continued or an aggravation of this. And it does mean that business behavior, consumer behavior will change with weaker remittance inflows. We could also see a bit more pressure on governments to address social problems, issues around weaker purchasing power because of higher inflation. We have seen some protests across Africa over the last few months as the cost of fuel and food continues to rise. What we would say, what we would also look out for is if people are unable to afford things like healthcare or education for their children as a result of weaker remittances from relatives abroad, we could also see a lot more pressure on governments to alleviate some of the challenges that people are facing. So certainly there is some risk of greater social unrest, especially in countries which are seeing elections over the next 3, 6, maybe 12 months as well. So a slightly negative effect from a sort of broader political and social and economic perspective.
But how do you see this, impacting, rate hikes by central bankers in sub-Saharan Africa?
Well, the effect would really be linked to how remittances or weaker remittances affect currencies. So in short, if we see remittances really having a negative effect on foreign currency reserves, putting downward pressure on currencies across the region, then you would see central banks actually, probably more likely to increase rates more aggressively than they would like to. We are seeing a number of central banks, including in South Africa. The South African Reserve Bank is quite aggressively raising interest rates, and if there were signs that much weaker remittances, much weaker foreign currency earnings from overseas was putting downward pressure on currencies, we would expect interest rate hikes and monetary policy tightening to accelerate over the next 6 to 12 months. And this would again have a negative effect on economic growth, government debt servicing costs, and investments in the region. So certainly there is a risk there.
All right, so much to unpack there for Sub-Saharan African remittances. Thank you so much. That was Matt Kindiger, practice leader at Frontier joining us, and enjoy the weekend.
Thank you, you too.
All right, so let's look at other stories now on the African continent. We see there's a provision to tax cryptocurrency and other digital assets in the 2022 finance bill. And this is according to Finance Minister there, Zainab Ahmed. She made this known in an extraordinary virtual meeting of National Economic Council on Thursday, where she gave an update on the main features of the finance bill. According to her, the proposed bill clarified the taxation of cryptocurrencies and other digital assets in line with the government policy thrust of enhancing cross-border and international taxation of growing e-commerce with emerging markets. The minister explained that by doing so, Nigeria would join the League of Jurisdictions currently taxing digital assets, including the UK, the US, Australia, India, Kenya, and South Africa. Last year, the Central Bank of Nigeria directed banks to close accounts of persons or entities involved in cryptocurrency transactions within their systems. The Apex Bank further urged citizens to desist from crypto assets, warning that they're used to fund illegal dealings. And South Africa's latest ABSA's Purchasing Manager Index has risen firmly into expansionary terrain, showing that manufacturing could see further gains in the final portion of 2022. ABSA reported PMI to increase to 52.6 points, up from 50 points in October, and an average level of 49.6 points recorded in the third quarter. ABSA's index tracking expected business conditions for the next 6 months also rose by 49 points to the month before the 51.7 point. APSA said that overall business activity and new sales orders improved for a second straight month after both had plunged during the load-shedding heavy month of September. And Standard & Poor's have issued a positive outlook on South Africa when reaffirming its credit rating 2 weeks ago, but the government's decision to take over some of Eskom's debt, along with swelling civil servant and social welfare bills, pose credit risk. The U.S. credit rating agency affirmed South Africa's BB minus to B, long and short-term foreign currency, and the BB to B, long and short-term local currency sovereign credit ratings, keeping its outlook positive. The agency is now watching to see how the debt transfer will impact South Africa's fiscal position. The country's debt and fiscal assessments were already weak without Eskom's debt. Should it significantly weigh on the country's fiscal trajectory, the outlook could be revised to the downside, as according to S&P, delivering its credit outlook for 2023. And building facilities for lithium-ion batteries in Africa will cost 3 times less than other parts of the world, and that's according to the president of the African Development Bank Group, Dr. Akinwumi Adesina. And he made this known during the African Union Industrialization Summit held in Niamey, Niger Republic. Adesina added that Africa has the potential to become a major player in the electric vehicle market. That's because lithium-ion batteries are essential for making electric vehicles. He also highlighted on the urgent need for rapid industrialization across Africa, noting that Africa has an abundance of natural resources, oil, gas, minerals, and metals, as well as vast blue economy that needs to be rapidly industrialized. And Kenya's Revenue Authority says about 60% of small businesses registered for value-added tax have failed to comply with its directive to fit mandatory internet-enabled tax registers by the close of the deadline. According to the KRA, this placed them at risk of a hefty 1 million shilling fine each. However, the KRA said that an estimated 94% of large taxpayers had complied with the directive by the lapse of the deadline. The head of TIMS at KRA, Hakamba Wagwe, says the tax authority remains determined to connect more traders to its system to help improve transparency. With the ETR TIMS installations, Kenya's Revenue Authority now projects its VAT collection to grow by at least 30%. KRA had first set a July 31st, 2022 deadline for installations of the internet-enabled ETRs, but twice extended it to September 30th, 2022, and later to November 30th, 2022. And that's it on Business Incorporated for the week. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.